Well, good morning. Jim is very kind and he humbles me, but I do appreciate him praying for my memory. It's not what it used to be. I like to think that it's just really full and things fall out occasionally. All right, well, first thing I want to start with is just go around. I want each of you to introduce yourself and what church you're with, okay? And we're going to start here.
Okay, I'm Donna Shackelford, and I am the secretary of First Baptist Church Point.
Mm-hmm.
I'm Dan Wynn. I'm the pastor at First Baptist Point.
Mm-hmm. We'll go on here.
Holly Diggs from the Well here in Greenville. Brenda Short, also from the Well, financial administrator for the Well.
Ashley?
Ashley Jeffrey from Church, I'm the financial secretary. Mary Lightfoot, First Baptist Church Point.
Gina Nichols, Fairleigh Baptist Church, the wife. Here for advising.
Yes. We will pray for you especially. Okay.
Barbara Renault, I'm with Faith Temple Baptist Church.
Mm-hmm.
Mary Barganier, Faith Temple.
Where is Faith Temple?
Faith Temple is on 1565. It actually has a Terrell address,
Mm-hmm.
but we are right on the almost county line between Hunt County and Kaufman County. We could have gone either way, but our church chose to come in the association.
Good choice. Good choice. And I want to introduce Diane Flynn. Diane has been interning with me for the last year, and she's working on her master's at East Texas A&M in accounting, and for some reason she wants to be a CPA. I thought maybe after working with me for a year she would say, nope, not for me, but she's hanging in there. But this is her first time to come to this conference, so it's just good to see all of your faces, and I'm sorry I will not remember your names probably, like you know, but just know that I do appreciate each and every one of you coming. All right, this year I have tried to put together a PowerPoint so that everybody could see, and I got to admit I did this while I was also attending a virtual seminar of my own, so forgive me if there's some little mistakes in there, but it will go along with your handout that you have in front of you. All right, we're just going to get started here. The big thing that happened earlier this year was the one big beautiful bill. It has been talked about and talked about and talked about. And finally, the IRS got around to issuing some regulations for it, and we got to go through it to see how it's going to impact my tax clients, and especially my pastors and our churches. And I'm glad to see there's not too many things in here that are going to really impact us. So I'm going to get started. The very first thing that is going to change in 2026, you know those pesky 1099 miscellaneouses or 1099 NECs that we've always had to issue if somebody came and they got a love offering more than $600, you were supposed to give them a 1099 NEC or miscellaneous. Well, starting next year, it goes to $2,000. So that will take some of the burden off because, I like big love offerings, but this way you don't have so much paperwork. So that is going to start next year, and that is for both the miscellaneous income and the non-employee compensation. So if you have somebody come and do work at the church and you pay them, $1,200, you won't have to give them a 1099. The other thing, in 2019, when President Trump was his first term, he initiated a whole bunch of tax law changes. And one of them was getting rid of the deduction per person that you got to take. And he implemented a big standard deduction, which is basically you would get like $4,000 per person in the household. So he moved that so that if you were married filing joint, you would get $28,000, and every year it's gone up. Well, now that he's back in office, those tax law changes have become permanent. So we will never go back to, well, I should never say never, because once we get a new administration, who knows what we will do. But for the rest of, all the way through 2028, we're going to have standard deductions. We will not be going back to that old exemption amount. And let's see, for somewhere in here I did put the limit. I think married filing joint this year is for 2025 is going to be $31,000. Now, because of that, large deduction that we now get. I think it's 15,000 if they're single. Most people can't itemize anymore unless you have a very expensive home and you have a lot of home interest, or you have very high property taxes, which I do have one pastor that lives over that way who has enormous property taxes. It's just amazing how much his is. But most people can't itemize anymore because of this, because you have to have medical has to meet the floor of 7.5% of the total income. And if you don't meet that or have that much, you don't get to take that. And then you have, sales tax. We don't have local tax here. It also is your mortgage interest and your property taxes and your charitable contributions have to equal more than that standard deduction before you get to take it. So, like I said, a lot of people don't itemize anymore. One other thing, made the one big beautiful bill made permanent for non-itemizing taxpayers is that for, if you'll remember, I don't know, 2, 3, 4, well, I think it's back when Trump was in the first time. If you couldn't itemize, you got to take $600. And it came off of your, what we call above the line. That means you had all your income, and then you got to subtract that $600 off of it before we calculated tax on it. Well, then it went away, but now it's back. And now it's going to be $1,000 for single people, $2,000 for married filing joint. So if you can't itemize, you'll get to take that at least, and that will reduce your taxable income. So if you are self-preparing your own tax returns, you need to know that. And that's going to be in 2026. We don't get it for 2025. Let's see. There is also, this is a new thing. Used to be we would just give cash to our churches, and then on Schedule A, where we itemize, we would put charitable contributions, we would put in how much it was for the year, and either you got to itemize and take it, or you didn't. Well, now they put a floor in. It has to be more than 0.5 of your income. So if you make $1,000, it would have to be $50 or more for the cash contributions. Most of us don't have a problem with that, but there is a floor there. And let's see. And of course, there is a 60% limit on cash gifts, and that's been made permanent as well. See, the ceiling, the 60% ceiling says that a taxpayer deductible, I've lost my place here, for charitable contributions cannot exceed 60% of their adjusted gross income. So AGI is the very, very last line before we calculate our taxes. So if you're more than that, 60% more than that, you can't take all those charitable contributions. And what happens is you get to carry them forward to the next year and the next year and the next year. All right. Now, this is only applicable to cash, which is checks, online giving, or cash equivalents. If it's property, stock, that's a whole different story. And we're not going to cover that today. Unless a lot of you are going to give property and stock to your church, and then we can talk. All right, the next thing. There is no more of the unreimbursed employee business expenses. We used to could take those on Schedule A where we itemized. And so if a pastor, and you're my only one in here, so I'm going to point at you, has a lot of unreimbursed expenses that he had from the church, he could put that on there and he would get about 2% of it back. Well, not anymore. When Trump was in the first time, he did away with that because of that big standard deduction. Well, now that's been made permanent. It's not going to come back until somebody down the line says different. All right. And the other last thing I have here is that in this one big beautiful bill, it enhanced the child and dependent care tax credit. It made it permanent. It was only temporary from his first term, and now it's going to be permanent. All right. ERC, I'm going to talk to you about a couple of scams that are going on. And this ERC thing is left over from last year. If you remember, during COVID, businesses were forced to shut down. Not so much here in Hunt County, but definitely over in Dallas and Collin County. So if they were forced to shut down, but they continued to pay their employees, Some of them can get a refund of the payroll taxes they paid in. Most churches did not apply. It would not apply to them. But, of course, like everything else, like having a natural disaster, there are always people who are going to take advantage of it. So there were these companies calling and say, hey, we can get you $20,000 back on your taxes. And I would have a church call me, and they said they could get us this much. And I said, well, how much did you pay in that year? 10,000. Well, how are they going to get you 20 if you only paid in 10? The math doesn't work. Well, these are all scammers. They take your 941s, your payroll tax reports that you make for your church. They change the numbers on them, submitted them to the IRS. Well, the IRS put a moratorium on them and just stopped processing because they had so much of this going on. And finally, year before last, they actually started paying it. The IRS was processing those, and in that whole thing, they had over 200 arrests for scams. 200 in a year. That's how many companies, well, it's 200 people in these companies that were doing the scams. So that's one of them. This other one is a new one to me. I just read about it a month or so ago, and I thought y'all might be interested in it. How many of you have online giving? Yeah, most of us are getting there. Well, this is a scenario, and I will tell you that when I read it, well, I'm just going to tell you. I'll read it to you, and then we'll talk about it. So on a Friday afternoon, kind of late in the day, a lady, and I don't know why they chose to be a lady. It could have been a man, but anyways, this thing said a lady, went online to a church's website, and she gave $2,000. Well, then she waited about an hour or so, and then she called one of the staff members. Now, it wasn't the financial person, because she didn't know who that was. But she called this other staff member. She said, I accidentally did this. I only meant $20. I cannot afford for that $2,000 to go through. I have got to get it back. So this good Samaritan staff member calls the pastor. The pastor says, well, we need to call this person, and this person says we need to call this person. And finally, it got back around to somebody who was eligible to write a check. And they said, okay, well, come up here and we'll just refund you the difference. So came back, wrote her a check for $1,880. Well, come Monday morning, when that $2,000 item should have processed through, guess what? It bounced. Yeah, she never intended to give it to start with. So when I read that, I thought, that has to be probably a church, somebody that's been coming to your church enough to know who to call. But we do have so much information online about our churches that it probably would not be hard for somebody to figure out, I will call the most vulnerable person, which might be the church secretary, or it might be the youth minister who doesn't know anything about it, right? The way to avoid this is, first of all, always talk to your financial person. That's where it should go to immediately. Just have that person call them. Because they're going to think about this, and they're going to think it through. Because number one, we don't ever write checks to people, especially if you don't know them. Number two, you process it back through the online giving. They have a way of refunding it back through there. So that's what you do, because it'll just go cancel the transaction. And then she would have to go back and do the $20 if she really meant to do it. So never, 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 never write a check, okay? So that was that scam. I thought that was pretty interesting. But I don't know why they picked it to be a woman that did it, but they did. All right, on to our next one. 5 mistakes that ministers make. I'm not saying ours here in front of us has made that mistake. I'm just saying some of them do. All right, they come in, especially if they're new to the ministry, and you mention the word housing allowance to them, and they get this blank look on their face. And they say, I don't know what that is. And they say, you do it. You figure it out. They say that usually to the church's financial secretary or just whoever. And so they rely on somebody else to decide what their housing allowance is going to be or how to split up their package. And when I say package, I'm talking the total compensation that a church is giving a pastor. Let's say it's $60,000. Well, 40,000 of it might be wages, and 10,000 might be housing allowance, and the rest of it could be for insurance or retirement. But a package is everything that he is compensated. Excuse me. All right. So that's number one. Don't ever let anybody else determine the housing allowance except the pastor or the ordained person that needs to do it. And the second thing they do wrong is they do not adopt an accountable plan. And we'll be talking more about accountable plans as we get on through this. But an accountable plan is where you have to establish in your, I'm not going to say rules and regulations, but you have to establish in your procedures that whoever's going to be reimbursed for things, they are going to be part of an accountable plan where they have to be accountable. They have to give you receipts. They have to do mileage logs if we're reimbursing them for travel. Now, mileage logs used to be a pain to do because you had to keep your little book in your car, and every time you went to visit somebody in the hospital, you had to write it down. Now, there are apps that do it for you. I use Mile IQ, and like I'm on my way out here, it logged the miles. And it already knows, because I've been out here before, it knows its business, so it just puts it in my business pile. And at the end of the year, I'll print out a report, and it'll tell me how many miles. And your tax preparer will be so happy to have that log. And because then all I need to know is what was your getting mileage on your car or truck, and then we're good to go. So but now that's just mileage. But if you're out buying anything else for the church, if you're going to go buy the groceries or the supplies and you want to be reimbursed, you need to be under this accountable plan so that you can be reimbursed without it becoming income to you. Because if you don't have an accountable plan, nothing's ever been said, nothing's ever been put in writing, and your finance committee can do all this for you. But if you don't have one, then if we reimburse you for mileage, guess what? That goes on your W-2 as income because you didn't give us anything to substantiate it, or all that software you bought, or the new computer that you bought. If you don't give us receipts, then it's not considered accountable plan. So that's number 2. 3 is just not planning for the future. And this is geared especially toward our younger ministers, those who are just getting started. They come out of seminary and they don't, it's like graduating from college. You have a lot of theory in your head, but you don't have practice. So once they get into the ministry, they start having a family. They start usually at smaller churches. They can't afford to pay them a whole lot, and they don't want to pay in their self-employment tax to Social Security. So they do things like opt out of that, and then before you know it, they're 65 and they have nothing. They don't have any retirement. They've opted out of Social Security, so they're not going to get those benefits. So that's the second thing. They need to sit with a mentor, pastor, who can explain what they need to do, or they need to talk to a tax professional. But if you are the financial person at your church, if you want to love on that minister, you point him to the right people. You sit him down and talk to him and tell him, you need to do this. And you help him provide for his future. That should be our responsibility toward our pastors. And part of that, I said, not paying in self-employment tax on earnings. And we're going to start talking about that one in just a minute. And then, of course, they can opt out without knowing the pros and cons. So I might as well jump right in here. Pastors have a foot in both worlds. They are considered an employee of the church as far as federal income tax goes. Federal income tax is what you put on your 1040. When you do your tax return, that's what goes up there on line 7, I think. And that's income, federal income. That's subject to federal income tax. So when you do your tax return, it's going to calculate tax, and that's what you're going to pay. So they are subject to that. But they are also considered self-employed. So they have to pay self-employment tax. Now, if they were a regular employee, and Ashley, I'm going to pick on you. She's a regular employee out at Emory Baptist. So she pays 7.5% for FICA and Medicare, which is Social Security. and the church pays the other half. But a pastor, he cannot pay into Social Security through the church withholding it for him as FICA and Medicare. He has to pay it in through self-employment, and he gets to pay both halves, the employee portion and the employer portion. So they automatically, just because of that, they have a 15.3% tax rate. And that applies to everything that they have. If it's salary and housing, they have to pay 15.3% on the whole thing. So when a pastor comes in to work at your church, and you're going to set him up in, let's say, QuickBooks, or heaven forbid QuickBooks, but whatever software you have, like ACS or Realm, you have to tell him that he is exempt from FICA and Medicare, so that it will not withhold that out of his check. Now, I have some puzzled looks coming my way. Because, remember, they're considered self-employed, and the church cannot withhold FICA and Medicare on them. You're not allowed to. Now, a minister is also exempt from having to have federal tax taken out of his check. Actually, most of us don't have to have it taken out. But when you do your tax return, you're going to regret it because you'll owe it all when you do your tax return. But ministers are exempt from that. They don't have to have it taken out, but I do suggest that they do. And this is what I do. I will sit down with the pastor and we will look at his package. And I'll figure out how much his self-employment tax is going to be on that. And then I'll figure how much his income tax is going to be based on his tax rate from the previous year. I add them together, divide it by how many times he gets paid a year, and I tell him, that's how much you want to withhold as federal withholding. What we're doing for our pastors there is we're helping him go ahead and pay in enough to cover his self-employment tax. This is all above board. The IRS allows it because they like getting that income during the year. They like them paying in. And we pay it in through our 941 tax deposits. So this way, we start out doing it at the beginning of the year. When we get to the end of the year, he has paid in everything. And when he does his tax return, if I did it correctly, he should at least get a little bit back. That's always my hope. Now, there are things that happen during the year. Sometimes I had one pastor come in, and I thought we had it all worked out. He said, oh, by the way, I bought an ostrich farm in the middle of the year. He said, and ostrich eggs were like $7,000 or something for the female ostrich, and the eggs were worth this much. And then the market died at the end of the year, and so he had this huge thing going on. So one year he had to pay in a lot, and the next year he got some back because he had a big loss. But anyway, I do the best I can, and we all do the best we can, but life happens sometimes between January and December, and we have to adjust for it. So does that, I know I saw some puzzled looks, but just remember, they have a foot in both camps. They're an employee on one hand, and they're self-employed on the other. Their taxation is like nobody else's. So that's why I tell my young ministers, you've got to meet with a tax professional who knows how to explain this to you. It doesn't need to be me. There's plenty of others that can do it. All right. So, year-end checklist. That brought me, I had to go through all that so we get to our checklist. All right. At the end of the year, your ordained staff, so maybe your youth pastor may be ordained, your senior adult pastor is probably ordained, and then, of course, your pastor would be. They need to fill out a housing worksheet for you, and I say you, I say all the financial people in here, and give it to you, I would hope by December 1st, because you have to present that to at least your finance committee or team, whatever you call them. It has to be voted on by a committee or the church where there are minutes taken. So, in our church, I'm, of course, on the finance committee, and we take minutes of our meetings. So we're all on the same page. We all know what happened in that last meeting. It's just good policy. So come December 1st, our pastor hands us his housing allowance numbers, and we look at them and we say, who makes a motion? We motion it, and it's in our minutes. That's all the IRS requires, is that it be in the minutes of some meeting. Now, some people, I was at a church not long ago. I was at their finance committee meeting, and there was so much bickering going on. And so much, well, you didn't tell me about that, or you didn't tell me about this, or you went and did this, and you didn't tell us about it. And finally, I just said, don't y'all take minutes? No, should we? Yeah, I think you should. That way we would all know what's going on. And that way when you walk out the door and you ask somebody else about what to do, you can't do that because we have minutes that said this is what the committee as a whole voted on. That's an aside. That meeting was terrible. And that church has been here around a long time. But, and I will say this, our smaller churches, especially our rural smaller churches, they haven't kept up the way they should. I'm not saying all of them, but the majority of them haven't. So we are still trying to educate them and get them brought into good compliance. And that's what I was doing out there that day. Where was I? Okay, we talked about having it voted on, either by the committee or the church body. And then they also, by the end of the year, they need to turn in all their receipts for those accountable plans we were talking about. So I would prefer they hand them in every month, just because that stays on top of it. These receipts, you can scan them in, put them in a PDF file, keep them that way. If it were me, though, I would take the original receipts, even though that thermal paper, it fades away eventually. But I need to make a copy, so I will have it, file it away, keep them for 3 years, and then you can destroy the paper copies and just keep the PDF files. But you need to keep them on hand. The pastor needs to give you his mileage logs, either by the month or he can do it for the year if we're reimbursing him for the mileage. Now, a lot of the bigger churches no longer really do that. They just go ahead, give them a travel allowance, add it to their income, and they just pay tax on it because they don't want to keep up with the mileage logs. So you got to get those receipts in. And then let's talk about, you got to remind them again about gathering up all their housing allowance receipts. Now, granted, it's not really the church financial administrator's job to remind the pastor to gather his receipts, but if you're good, you will remind them that their tax preparer is going to want it. And the tax preparer does not want receipts. We just want totals. Thank you. Please don't bring me a box of receipts. I do have a couple that do that. And that costs more when you bring me receipts. So just do an Excel spreadsheet. Put it in. Utilities need to be totaled by themselves, and then everything else that you had for housing. And we're going to get to what constitutes housing allowance in a little bit. You should have your staff fill out new W-4 forms by the end of the year for the next year. We don't take exemptions anymore. We don't have that, how many kids do you have, and you get $4,000 per kid. We don't do that anymore. So it's not so important there, but it is important if they should be bivocational and they have, let's say, 2 jobs. Maybe they work as a janitor at church, but they also have a full-time job somewhere else. Well, we may not need to withhold as much tax on that janitorial job because they're paying it all in at the other job, their main job. And that's what the W-4 is for. It asks you on there, do you have a second job? And they just need to fill it out. And you should have it on file. Now, we are guilty about not changing those, but we should. We really should do them every year. Okay. Make sure that all your 941s are filed in a timely manner. And by the end of the year, that fourth quarter 941 is due on January the 15th. What else is due at the end of the year? W-2s. And we have to get those done, and we have to get our 1099s done. Now, if you have more than 10 employees, you have to electronically file your W-2s. You have to electronically file your 1099s. So, and that all has to be done by January 31st. Let's see. What else do we have here? On number 7, which I didn't number those up there, prepare W-2s. For pastors and ordained staff, make sure that box 1 is only their wages, and there should be nothing in box 3 and 5. And I'll go over that later. We're going to have an actual sample of a W-2 up there, and we'll talk about that. Also, I told you already about if you have more than 10, you have to electronically file them. So we're done with that part. So we'll move on over. Okay, let's define a minister. What is a minister exactly? Well, being Southern Baptist churches, we traditionally think of our ministers as being ordained. Now, the IRS code says it can be licensed or commissioned or ordained. So, but usually, for Southern Baptists, we license a young man or sometimes an old man, who decides they want to go in the ministry. We license them first, and then we let them either get experience or they go to seminary, and then we ordain them when the church body thinks that they are ready to take on the role as a pastor. So, the IRS looks at it like this. They have to be considered the religious leader of the church. They have to conduct the religious worship. Now, I'm not talking about just music. We're talking about the whole bringing the word or doing the music. This also could be a youth pastor because he is also bringing the word when he's working with his youth. They have to be able to do the sacerdotal functions, which is our Lord's Supper that we do. And they also should be able to marry people. They would do funerals. They would do baptisms. And pretty much they would have the responsibility of the overall control of the church and the conduct of the church and the maintenance of the local church. Now, when I say control, I don't mean they control the church. I mean they are just instrumental in how and where the church goes. All right, people who are not qualified to be a minister or treated as a minister tax-wise. People who are just in seminary, just going to school does not make you eligible to be considered a minister. Non-ordained, unlicensed individuals can't do that. Ordained ministers working as an administrator. So if you're not actively working as a pastor, but maybe you've become a business administrator, you may be ordained, but as far as your tax purpose goes, you are not considered a minister. So in that case, if he's the business administrator, you can withhold all the normal taxes that we would take out on any other employee, and he's no longer treated different. But I don't have too many pastors that do that. And ordained ministers that are working as an executive in a non-religious organization or some other non-church related. And I don't, if you have a nonprofit ministry here in Hunt County that helps the homeless or whatever, you may be an ordained minister, but if you are the administrator of that and that is your job, you aren't considered a minister for tax purposes. You're just an employee. Just an employee. But you're a very special employee. All right. Ministers' pay packages. I told you there's many things that can make it up, and it's going to be cash, which is what we give them as a paycheck, fringe benefits, that accountable plan that we were talking about. These all things have to be agreed upon with the prospective minister. And these are things you should put in writing before you call a pastor. So when you sit down with a prospective pastor and you give him the package of what his compensation is going to be, it should outline these things and be in there so that he can see exactly what the church is going to do. Let me see here. Did I leave anything out on there? Yeah, and special gifts. We don't want to leave that out. Let's talk about special gifts for just a minute. Special gifts are love offerings usually. Sometimes churches, I had one church that they gave their pastor a trip. Here's the thing. Love offerings, bonuses are all taxable to the pastor. So if the church takes up a love offering and the people who give the money are getting charitable tax contribution credit for it on their contribution statements, then that all is taxable to him. So if you don't want to add to his tax burden, then maybe as an individual you should just slip him a check or an envelope with some money in it, because that doesn't go in his W-2. But if we give it to him collectively as a church, it does. Okay? That trip, which was about $10,000, it went on the W-2 as income, and he has to pay tax on it. All right. Yes, ma'am. No, go ahead. Yes.
Keep on saying W-2, but then you're saying his taxes are like a 1099, so
Well, we're going to get to that, but he doesn't get a 1099.
he doesn't get it tonight. But he has to pay self-employment.
Yes,
like a 1099.
like a 1099 person, but he doesn't do a 1099
He gets W-2,
because he's an employee of the church.
but then he still has to pay self-employment as like a normal 1099 would be.
Would be on his tax return, but he does not get an actual 1099. Now,
Just wanted to clarify.
I want to say there's an exception. Interim pastors, they can get a 1099. Okay? Or sometimes retired pastors that will come in and fill in they'll get 1099s. But that's that weird thing. He's a W-2 employee, and he's also self-employed, but he doesn't get that 1099. He just gets the W-2. And then we're going to talk about what goes on in that in just a minute. No, that's no problem. I want you to ask questions, because that's what we're here for, is learn. All right, special provisions for tax ministers. All right. I've already talked to you about being an employee of the church, and then they're also self-employed. So I've pretty much have already covered this at the bottom of page 4. Well, maybe page 5 for y'all. Okay. Now, and I told you that he can have withheld from his earnings at the church. He can have federal withholding withheld. He would need to tell you how much. The software will calculate an amount for you, but it probably would not be enough to cover his whole tax liability at the end of the year. So that's why I was saying we have to look at the whole package for him and figure out what that tax is going to be. All right. So his base salary is part of his package. And then we have a non-accountable expense reimbursement. So what that means is, like I was talking about, if they go out and buy a computer and they don't have this accountable plan in place, then if the church reimburses him for that computer, it's his computer, but they're reimbursing him, and it costs $2,000, well, that goes on his W-2 because it's income, because he doesn't have this accountable plan. So that's called a non-accountable plan, meaning you didn't do anything. You don't have anything in place, so if you give him money to reimburse him for anything, it's going to be taxable to him. And the special occasion gifts is what what we were talking about, the love offerings. Premiums on group term life insurance. A lot of our churches do have life insurance on their pastors. And if the premium is over $50,000, let's say that's a $100,000 policy, then they have to pay tax on that difference between the $50,000 and whatever it is. So let's say 100, it's another 50,000. Let's do 75. So on that $25,000 difference, they have to pay tax on that. And usually we just do it at the end of the year. We figure out there's a formula that the IRS has in its publication 15, and we just figure out what it is, and he doesn't get the money. We just have to put it in there long enough for it to calculate the tax, and then we take it right back out. So that's something I would talk you through because it's a little tricky thing to do. ACS has a way of doing it, but you have to manipulate it. QuickBooks, it's almost impossible. So, but anyway, we can do it. But if you do that, just know that premium over $50,000 is taxable to them. It's taxable to any employee, whether it's a pastor or not. All right, let's. And housing allowance. Okay, so, yes, that's right.
Our mobile phone allowance, is that still treated sort of differently?
it just, each church has a kind of its own way of doing things. If you are if you're giving him money to help pay for his cell phone, he should be giving you something back, like a part of the bill or the receipt. But you wouldn't want to pay all of his cell phone bill because some of that's going to be personal and some of it is, a family plan probably. So that small portion, he needs to just give you a copy of the phone bill. Now, there are other churches who just go ahead and compensate them for it. They put it in, it's just W-2, it's just income so that they don't have to mess with all that. So,
It's more like a reimbursement.
yes. So I would put it, if you're not going to just give it to him up front in his salary, then I would do it as an accountable plan where at the end of the year or every quarter or every month, he just gives you a copy of his cell phone bill. You put it in a drawer and you've got it. Okay. All right. Yes. Yes.
So if we give them $50 once a month for their taxable,
Does he give you anything back? Does he give you a copy of his cell phone bill?
that's if it's not taxable, because that's the question I have.
If he doesn't give you anything, it's going to be taxable. If in your finance committee meetings you say, okay, we're going to set up an accountable plan, which basically is just saying we're going to set up an accountable plan, and he's going to start giving us cell phone bills every month, and we're going to reimburse for his portion of it, then it becomes non-taxable. Does that make sense? Okay. Does that make sense? About clear as mud, I suspect. Okay. All right, so on those things, salary, all of those things I listed there go on box 1 of the W-2, which is where federal wages, that's box 1. That's the only thing that goes in there. So now I want to move on to the exciting topic of housing allowance. Everybody gets so excited about that because this is the chance the pastors get to move money out of that fully taxable federal withholding and self-employment category over into this other section where they only have to pay self-employment tax on it. So anything that goes over into housing allowance is only subject to self-employment. They do not have to pay federal income tax on it. So that means, as a tax preparer, my job is to say, we need to put as much as we can over into housing allowance so that we don't have to pay as much tax on it. But housing allowance can only be certain things. So a pastor can, when by the way, in the next to the last sheet maybe is a housing allowance worksheet. No, that's just, I'm sorry, that's just the resolution. I guess I didn't bring the worksheet. I am so sorry. You can call my office or send me an email and I'll send you one. But it's a housing allowance worksheet. I'm sorry, I forgot to put it in there. And it will lead a pastor through all the things that he can claim. He can claim his mortgage. If he doesn't own his home and he's renting, he can claim the rent. He can claim all the utilities, electric, gas, water, phone. I would put phone in there. I don't, because, phone is a utility. Streaming services nowadays, cable, that's all goes under utilities. Okay.
I'm sorry.
That's a,
Can you claim, like, TV, cable TV? I thought that was considered entertainment. You could claim that.
you can claim it. I would. And we have been for years. And see, things are changing. It used, we didn't have all these streaming services. So the IRS is struggling with their wordage, but I do. If I can argue before the IRS that this is a legitimate housing expense, and I have a 60% chance of winning, then that's all I need. And I believe I can. Especially like on a youth pastor. They have them over to their house. What are they going to do? They're probably going to sit down and either watch something on a streaming service or they're going to use their Xbox or their PS2, whatever, and do something that brings the kids in and is part of what they're ministering to. This is how they get them in. So I think it's very acceptable. I do. Now, I'm not going to go overboard. If you go get every streaming service in the world, then we would have to talk, because that's just crazy. All right. Housing allowance. What else can go in there? If the minister plans in advance, and he plans to, let's say, buy new furniture in the next year, that can go in his housing allowance, because that's furnishings. If the wife wants new blinds or drapes next year, plan for it, how much you're going to spend, put it in the housing allowance, because it's allowed. You're going to buy a new zero-turn riding lawnmower to maintain your yard, put it in the housing allowance. So all that money that he's collecting here as housing expense, all that money gets to be moved out of this pot where it's taxable for everything over to this other pot where it's only taxable for self-employment tax. So you can see when we do his tax return, that's going to reduce his tax. Still going to be a lot at 15.3%, but it's better than paying 25% or 30%. So, let's see, what else do I have in there? Mortgage, rent, property insurance, and taxes if they're not already in the mortgage. So if you have an escrow account, you have to, can't double dip. So, let's see, what else do we have here? Improvements to the home, new furnishings, maintenance equipment. That was that zero-turn lawnmower.
What about like house insurance?
Yes. Mm-hmm. Housing insurance, or if you're renting, renter's insurance, that would count. Now, so the minister needs to go through, he needs to figure out what his housing allowance is going to be. And then he needs to hand it off to the finance person or to the finance committee at the church. They need to look through it. They need to vote on it. It needs to be in the minutes like we talked about. And that, then, come January 1st, that one is in play. Let's see. I think I skipped something here. Now, for the pastor part, this doesn't necessarily, well, it does. The pastor needs, by the end of December, he should be going through and looking at all his receipts, adding them up, adding up all of his utilities, getting all of the actual expense together. Because if he got really carried away with his housing allowance and said, oh, I'm going to spend $75,000 in housing next year, and then when he adds up all of his receipts toward the end of the year, it was only, $25,000, then all that he doesn't have receipts for, guess where it goes? It goes right back over into the pot where it's taxable for everything. So, don't get carried away on that housing allowance thing. It has to be fairly accurate, because we don't want to put it back over to where it's going to be taxable for all the taxes. Okay?
That usually doesn't happen on the W-2, though. That happens on this individual tax return.
Mm-hmm. Yes.
Unused housing allowance.
Yeah, the unused housing allowance. When they do their clergy worksheets on the tax return, that's where it will be discovered and added back. So, but as a good financial administrator, you will remind them, you got to have actual receipts to back up what you say, or else it's going to be taxable to you. Okay? Now, what I just talked about was somebody who owns or is renting a home. But what if they live in a parsonage? That's kind of a whole different thing. So, can a pastor have housing allowance if he's living in a church parsonage? Because obviously the church is providing his home for him. Now, and a lot of times, they will also pay the utilities for him. Not all the time, but sometimes. So anything the church doesn't pay for, like, let's say for my example, they don't pay for utilities, that money can be considered housing allowance. If he is responsible for the upkeep of the parsonage, which that rarely happens, usually the church is going to do it, but let's say that he goes out and buys lawn equipment so that he can maintain the yard. Maybe he's a real yard person and he wants it to look beautiful. Well, he can go buy that, and that can be considered housing allowance because he's maintaining that. So you won't get to take as much, obviously, because, the church is providing the actual building, but that would help to move as much as you can over to that. Yes, it's his responsibility on the housing allowance. It's his responsibility to keep up with those receipts and to come up with them. Because the IRS is going to audit him. They're not going to audit the church for that. They're going to audit him because they'll find it on his tax return. Okay. Now, these accountable plans, though, that's kind of on both of you. You need to have those receipts. You need to keep them in the church office. All right. Now, this next part I'm going to talk about is it's very hard to understand. When a pastor does his tax return, and he lives in a church parsonage, when he gets to his clergy worksheets, it wants to know, are you living in a parsonage, or are you living in, own your own home or renting a home? If you tell it that you are living in the church parsonage, when it looks at your housing allowance, it allows you to take the smaller of either the housing allowance you claimed, and we're going to assume for my purposes that you had receipts to match it, or the fair market rental value of the home. You get to deduct either one of those from your federal taxable income, but it's always the smaller of the two. So, could you, if you claim no housing allowance, could you claim the fair market rental value of the parsonage on your tax return and have it reduce your federal income taxable wages by that amount? You can, but it has to be reasonable. So, if you only make $30,000 and the fair market rental value of the home is $40,000, the IRS is not going to let that fly. So, that's why you're only going to get the smaller of either housing or fair market rental value. In all of my years of doing this, I have not seen a fair market rental value work. It's always been too much. Because when you calculate that, or what you should do is ask a realtor how much that property rents for, and especially nowadays, they're very expensive. Or go out to Zillow and see what the house is worth, and then it'll tell you approximately what it would rent for every month. So you multiply that by 12, and usually it's $35,000, $40,000 once you add the value of the furnishings in it. So if you wanted to rent that house fully furnished, what would it cost? So it's usually going to be way more than what you can take. So I would just as soon you go ahead and set aside as much into housing allowance as you could, because we know we'll get that, where we might not get all of the fair market rental value. Like I said, that's a very murky area right there. So if you have questions, please ask. I'll try to explain. How many of you have church parsonages? Y'all do, and you do. They're becoming a thing of the past. A lot of churches are getting rid of them. Our church has one. And now if we've put almost $50,000 worth of stuff into it, they're thinking they should have sold it. And that's what a lot of churches do. They sell them and just invest the money because it's kind of a money pit. All right. Now, we've already talked about all the stuff that could go into housing allowance, and then we're going to go back here. And I've already talked that mortgage or rent payments, that counts. All right, so that's housing allowance. So let's questions about housing allowance. Because it is the thing I get more questions about it and what is considered a charitable contribution. Those are my two most asked questions. So, anybody have a question about housing allowance? All right. I'll be here the rest of the day. You can ask me. All right. Another thing for pastors is they get fringe benefits. This can be part of a pastor's pay. What are fringe benefits? Group health insurance, life insurance. We're talking about the premiums over $50,000. Disability insurance premiums. I don't want to talk about the Social Security reimbursement because that's if the church decides, oh, I know you're paying 15% for self-employment, we're going to give you that money to help cover that tax. Well, guess what? it becomes taxable. So you're paying tax on the taxable. So we need to do something else. Retirement contributions are fringe benefit. The church may match it. And then we have our flex spending accounts, which are tax-free. These are things like, well, FSAs and some child care benefits. Let's see here. I don't have any churches with an HSA that I know of, but I think you could do one. Mm-hmm. It should be non-taxable.
Because on the flex spending, do they change the rule over, or does the flex spending goes away?
It goes away. Either you use it or you lose it. Mm-hmm. All right.
I think First Commerce, Laura, who's not here,
Mm-hmm.
they walk through that.
They have an HSA? Okay.
What is an HSA?
Health savings account. It's where they can, you can have your own individual one. The church could have a plan for it. Like I said, I don't run into that often in churches. It's just individual, especially the ones that work at big companies. I see it.
The standard is that it rolls over
Mm-hmm. Yeah,
throughout the year, and then the next year.
you don't lose it. Yeah. Okay. On underneath here, on what page are we on? 7. Okay. I have the life insurance premiums that I was talking about earlier. That if it's under 50,000, it's not taxable to them, but if it's over, it's taxable, and it has to be put into box 1. And there is a whole calculation for that in the IRS publication 15B. Retirement contributions made to a qualified 403B plan are not taxable to federal withholding. So on a pastor's W-2, that reduces what goes in that box 1. But we do have to report it down in box 12 on the W-2. All right, we've already talked about an accountable plan. You've probably heard all you want to hear about that. They do need to do their receipts in a timely fashion. I put in here, the IRS would like for it to be within 60 days to substantiate the expense. And then I've already put on there that was mileage. Let's talk about professional book magazine software. Is it time to eat already? Oh, okay, sorry. Let's stop right here and let's take a little bitty break and y'all go get your food. That is a pastor oftentimes, especially younger pastors, they will buy books. Now, ebooks are very popular, but for some reason pastors like to build a physical library. So they buy lots of books. And they buy software. They buy laptop computers. So in our accountable plan that we've been talking about, if you have that adopted for professional expense reimbursements, which covers all of this stuff, then they can be reimbursed from the church for that. We've already talked about travel and supplies. I don't know, what kind of supplies does a pastor need besides office supplies? I can't think of anything else other than office supplies. The church would provide all that, so yeah, maybe you need a flashlight. Maybe waiters to wear in the baptistry. Maybe that's supplies. See, that would be something. So if we have accountable plans, all that stuff can be covered in there. But you need to, when you set the accountable plan up, which is nothing more than reading it into the minutes of a meeting, you need to outline the things that will be in there. Now, let's say that your pastor, he goes out and he buys a bunch of stuff and he gives you most of the receipts, but you never do get that receipt for that $2,000 computer, then what's going to happen? A terrible thing happens then, because all the expenses, even the ones that you got the receipts for, they all become taxable. If you miss one, it's going to negate all of it. It all goes back to being taxable. So let's be very careful about keeping up the receipts. Now, There are a couple of apps, and I've not used them, that allow you to scan in receipts and you can send them to people, whoever you want to send them to. Mitchell Money at Ridgecrest was going to look at one for me, and I haven't heard back from him yet about it. But if that works, that could be a wonderful thing to have. Now, the churches that yes, ma'am?
I found your notes app, just the plain notes.
Mm-hmm.
Will scan, on most of the newer phones, will scan your receipts. And it will turn it into a PDF where you can send it in a text message.
There you go. Notes.
Notes, just the notes.
Yeah, Notes. On Android or Apple?
I'm on Android.
Android. And it's probably free.
Yeah, it's free, comes with the phone.
There you go. There's one right there.
Okay, just take a picture and it automatically will send it to a PDF. I figured that out a couple weeks ago because I'm real big on receipts from my husband.
Mm-hmm.
Household. And I'm like, dude, you could just take a picture and send it to me and I'm good. You know?
Most of our pastors are good at taking pictures. So it'd be great. Take a picture, it goes through that app, and then just email it back to whoever needs it. Churches that I do their accounting, they are emailing me receipts left and right. So I got to have them because it's a big penalty if you don't. Yes, ma'am.
Pastor's buying a bunch of books for his library and reimburse him for all of that. Say his laptop too, you reimburse all that. And then they become his property.
Yeah, I need to address that.
Okay, please address it.
If the church reimburses that pastor for those books, the books belong to the church.
Right, that's
Yes. But there's an exception. If the pastor has a package, let's say $60,000, and he says, I want to set aside out of my package $2,000 for books. And when I give you the receipts, I just want you to reimburse it out of my $2,000 that I set aside. Well, then the books are his because he used part of his salary. He just had you hold it and to pay for those as he bought them. Does that make sense to you? So that's the exception. But now if he doesn't do that, the church is just, they put a line item in the budget that said professional expense reimbursement, and they gave the pastor a budget of, $3,000. So he spends it, but he didn't give you those receipts, or he just misses one, then it all is going to become taxable, and we're going to put it on his W-2 at the end of the year. So that's why these apps.
package, it goes as W-2 too, whether you do it.
No, it's tax-free. If it's set aside out of his package for professional expense reimbursement and it's the accountable plan, he's got all the receipts, it's tax exempt. I know. This is the IRS we're talking about. Okay?
What you're saying is that the money he spent the 2,000 and did the receipts would add to his original package amount. So if at the beginning of the year they go, okay, this is your package amount, and then at the end of the year he spent reimbursement wise $2,000, that would add to his income.
You have to set it aside before.
Before, right.
Yeah.
If he didn't do it before, he added at the end, at the end of the year.
Okay. At the beginning of the year, in December, he says, next year I'm going to spend $2,000 for professional expense reimbursement, and I want to set that part of my salary aside for it. Then whatever he spends out of that is non-taxable to him. Now, if he doesn't spend it all, he loses it. You can't move it back to income. It just goes away.
But then, so I'm just gonna throw a number.
Okay.
Let's say his package deal with housing and everything is $50,000. And then he comes back at the end of the year and he's got all his receipts, laptop, whatever books, say it's $5,000. Then that would increase his taxable income to 55. The package would end up now being 55,000 as far as what the church paid him.
Not if, well, see, this is where we're going to go back to, you're saying at the end of 2025, but he has to do it before the end of 2024.
That's what I'm saying, is last December, the package was 50,000. He goes, okay, this is,
But how much of that 50 did he set aside?
he did, that's what,
That's the problem.
right. So if he didn't set aside anything, this would increase the final number to 55.
Yes, it would, if he didn't set it aside.
Just trying to,
Yeah. You got to have that accountable plan in place, and it has to say that he is setting part of his salary aside for that. And he gets to spend it tax-free as long as he has those receipts. Okay? Now, most churches don't have the pastor take it out of their package. They just give them a line item. So the accountable plan also keeps that from being taxable to them.
So if you have an accountable plan and you buy a $200 book, then that book isn't yours, it's the church's.
If the
It's a regular accountable plan.
Yes, if it's just a budget line item that they set aside for you to use, then it's the church's. If you set it aside out of your salary, then it's yours.
Okay, so if I set up my accountable plan and I say, I'm gonna spend $2,000 this year for books and a computer or whatever else it is, like just say $2,000 for supplies, those supplies I buy are mine. personal.
Like those waiters, yeah.
If I don't put that up aside, then whatever I buy becomes the church's through that account.
That's right. You have to, the money has to be coming out of your package. So that makes it yours. But, yes.
So I'm sorry, what benefit is it to do that? I mean, it would be just better to have your income.
Well, if it depends on the church size and how their cash flow is. So, let's say it's a very small church and they don't have a lot of money, but the pastor wants to set aside part of his salary. We can do that. We can create another line item for professional expense reimbursement, move $2,000 out of his salary down to that line, and then as he hands receipts, we just reimburse him. And whatever he buys is his. Okay. Bigger churches, they just let the pastor keep his money and they just give him an expense account basically for it, but he has to provide receipts. But whatever he buys is going to belong to the church. So he has to leave his books.
Leave all the books, the computer, or else you have to, if you're gonna give it to him, then it becomes income to him. You have to-
That's right. That's right. Yeah. So what she was saying though, if he leaves and then you go ahead and give him the books and the computer or whatever he bought, well, that becomes income to him. So, all right. The thing about the accountable plan, though, is if you set aside the $2,000 out of your own salary, this is for the smaller churches that do it this way. Let's say you set aside that $2,000 and you don't spend it all, you don't get it back. It's gone. That's the downside to it. So make sure you spend it and make sure that you don't put too much in it either. Okay? Some churches want to say, oh, we have it this much left over out of, and this, I'm talking about it came out of his salary to start with, so we're just going to give it back to you. Well, you can't. It's gone because it was under the accountable plan. It's not allowed. Now, the other situation where the church just did a line item for him, and let's say there's, $1,000 left in it, if you want to give it to him as a bonus, some churches do, but they shouldn't. It should just be gone. But sometimes they will go ahead and include it as a bonus, but then that makes it all, taxable. So, a non-accountable plan. I mean, I've had churches that actually said in their minutes, we do not have an accountable plan, so we are a non-accountable plan. Well, it has no tax benefit for a pastor at all. So it's worthless. Anything that he gets goes into box 1. Travel, we've already talked about. I'm going to move on. I'm running out of time. All right. You can skip that one, Joe. We're going to go on. A non-accountable plan is just a non-accountable plan. All right. Here's a sample of our W-2. All right. Page 9. This is where I'm talking about what all goes into the different boxes of the W-2. And I hope you can see that, but that was as big as I could get it. Box 1, it says wages, tips, and other compensation. That's where his federal taxable wages go in that box. It does not go down in 3 or 5. It's not Social Security. It's not Medicare. It goes in 1. The things that go in box 1 is his salary. Other special gifts that he gets, love offerings and things, that goes in box 1. All right? If he doesn't have an accountable plan, then anything you've reimbursed him is going to go in box 1. Okay, on 9, I'm going on down through there about housing allowance. Well, it goes in box 14, where it says other. That's housing allowance, and you just type in housing allowance and put the dollar out there. Okay. Actually, go back to the W-2, Joe. I think it makes more sense to them to see it. Thank you. All right, so box 12, which is over on your far left, I think, it has 12A, B, C, D. That's where we put their benefits, like health insurance, their retirement goes in there. There's a code for these things. It's all in the Circular E, publication 15. And it's also, usually it's on the back of the instructions of the W-2 as well. But those are all of his benefits. Like I said, health insurance, if he has the life insurance over 50,000, his retirement, that all goes in boxes 12. And like I said, there are codes for each one of those. The church's portion of a retirement plan. Pastor sets aside so much of his salary to go to retirement, and that's non-taxable. That money is. But the church matches it, or the church is also giving. That doesn't go in the W-2. It's just his portion. Automobile allowance or reimbursement, if he's under an accountable plan, it doesn't go on the W-2 because it's tax-free. Same thing, I've got, but if it was non-accountable, it goes in box 1. Professional expense reimbursement under an accountable plan does not go in the W-2, but if he doesn't have an accountable plan, guess where it goes? On the W-2, box 1. All right, so I gave you pages 9 and 10. These are our poor Pastor White. He's been my pastor now for 10 years. And he just doesn't ever get a raise. I really need to give him a raise. So he was hired for a base salary of $46,000, which 10 years ago, that was probably a pretty generous salary, but not so much now. He has a non-accountable plan reimbursement line item of $1,000. And for Pastor Appreciation Sunday, he got a love offering of $500. The church didn't have health insurance. They didn't pay anything for him. They didn't pay anything or he didn't set aside anything for retirement. He personally paid in separately from out of the church into an IRA on his own. It did not go through the church. The church paid in, he did set aside $1,200 for federal income tax, and the church did pay that in for him through their 941 tax deposits. So his W-2 looks like this. His salary of $46,000, his non-accountable plan reimbursement of $1,000, and his $500 that he got as a love offering are all up there in box 1, and they're taxable. So he's probably going to be in about the 10% tax bracket on his tax return. So he's going to pay 10% on that $47,500. And remember, that's all subject to self-employment as well. So he's going to pay another 15.3% on top of that. So he's going to pay 25.3 on that $47,500. So, but being the good church financial officers that y'all are, you're going to turn to the next page, and you're going to do Pastor White a big favor. You're going to go through his package, and we're going to start setting stuff aside. All right, he still didn't get a raise, though. So his base, and at the end of 2023, and this is what we're working on is 24. So at the end of 2023, he requested and had approved at the end of the year a housing allowance of $10,000. The church set up a qualified 403B retirement plan for him in his name, and he contributed $2,000 to that. The church also had a cafeteria plan group health insurance. Now, Pastor White, his portion alone for him was $3,000, but his family's portion was going to be $9,000, and he paid for that himself out of his salary. He had an accountable plan for his automobile allowance. He handed in those logs every month faithfully. So it was $1,500, and it's there, and we're not going to do anything with it. He had a professional expense reimbursement account of $1,000, and he handed in all those receipts. So on our W-2, I want you to look how we broke it out. His salary was $25,000, and housing was $10,000. So look at our W-2. In box 1, it only says $25,500. Is that what it says? Yeah, $25,500. All right, so that's his $25,000 salary, and the $2,000 that he, where'd that $2,000 come from? Oh, I'm sorry, his love offering that he got. That's where the rest of it came from. I think. I can't read that from here. What does that say? $25,500. That's right. He got $500 love offering. All right. So that's all in box 1. His housing is down in box 14. See where it says housing and it says $10,000? That's where that went. His health insurance, which was the church paid, the $3,000 for him, and then he paid $9,000 on his own. So his total health insurance premiums that were paid in was $12,000, and that's over there in box 12B with the code DD by it, because that is the group health insurance premiums total that were paid in. It's for his tax preparer to know that. The reason that was important was because when the Obamacare came out, we had to know that. It was not so important right now, but it may be soon again. His retirement contribution of $2,000, that's in box 12A with the letter E, which is a 403B retirement plan. Now, the church set that up for him. And probably, being a Southern Baptist church, it's probably through Guidestone. And they deducted so much per paycheck out every pay period, and then they sent it on into Guidestone for him. We do it that way, it reduces his taxable income by whatever he contributes. And that way, he doesn't have to pay federal income tax on it. He'll pay the tax on it when he withdraws it from that 403B, hopefully when he's ready to retire. But the automobile allowance doesn't go anywhere on here because it was under an accountable plan and he gave us all our receipts. The professional expense reimbursement, same thing. It doesn't go on here. So now, using this scenario, let's say that he is at a small church and he set aside out of his salary the automobile allowance and the professional expense reimbursement. That would be $2,500 that he would have set aside out of the $25,000 he received. So that would reduce that in box 1 by $2,500. So it would just be $22,500. He would get to reduce it. Because he set it aside and he did everything he was supposed to do, so it's non-taxable. He didn't have to pay tax on it. But on this W-2, when I go to do Pastor White's tax return, which I'm hoping he will come back to me this year, I will be putting on line 1 of the 1040, whatever's in box 1 up there. I'll put in the withholding for $1,200, and I won't be putting the housing allowance anywhere except on the clergy worksheets. And on the clergy worksheets, I have to put how much he claimed, $10,000. I have to know the exact amount he spent on utilities and the exact amount he spent on everything else that's allowed for housing expenses. And then the clergy worksheet is going to do it. It's going to ask me for the fair market rental value of his home. So if he has a 2,200 square foot home and it's relatively, 10 years old, let's say, in Greenville, and it's fully furnished, that could easily be a $30,000 fair market rental value. Like I said, you need to really ask a realtor, or like I said, you go to Zillow and look it up that way. That's what I do. So on the clergy worksheet, though, it's going to look, okay, is his actual housing expense more or less than what he claimed? So if the housing expense is less, the difference is going to go back up into box 1, line 7 on the W. It's going to be taxable. And then as far as what he's going to pay self-employment tax on, he's going to look at either the fair market rental value of the house or the total amount of housing expense he actually spent, whichever is smaller. That's what you get. So usually it's the housing allowance. So he's going to pay self-employment tax on that 25.5 and on the 10,000. So he's going to pay self-employment tax on $35,000. But he's only going to pay federal income tax on the 25.5. So we saved him some money. Because if it was all up in box 1, the whole 47,000, then that's subject to everything. Okay, that's it in a nutshell. So at the end of the year, if you've done all these other things with the accountable plan, you've got your housing all squared away, when you go to do the W-2, it should look like this. Now, if he had the long-term life insurance premiums over $50,000, it would also go in box 12. But Pastor White, he didn't get that. Maybe next year. And just for the sake of this, the next, what do I have next? Okay. I just went through what I just told you. The automobile allowance, if it's a non-accountable plan, it has to be reported in box 1. Professional expense, under the accountable plan, you don't report it. If it's non-accountable, where do you put it? Where? Say it, somebody. Yes, thank you. Box 1. All right. All right, 941s. This is the first time I've ever done this part. And I thought, why haven't I been? Because your W-2s have to tie to these 941 payroll reports. These are quarterly payroll income tax reports. So the one I have here, and I don't know if you can read that or not. Poor Pastor White, he only got paid one time and it was in the fourth quarter. So all of his wages are on this one 941. Which, if you think about it though, if he made that for the other 3 quarters, that's pretty good salary. That's about $170,000. But he only got it in this 1 quarter. So the 941 would look like this. The 22.5 would be in box 2. That's his taxable wages. Box 3, I'm hoping I'm using the right numbers because I can't see that real well. Box 3 is his income tax withholding, the $1,200. But the most important thing on here is look at boxes 5A and C. There is nothing there. That's FICA and Medicare wages. Same thing with our W-2 in boxes 3 and 5. There were no Medicare wages. So the only thing owed on this is his federal withholding. So the church has paid that in through the EFTPS system. And IRS now knows that he's paid in $1,200 so that when we do his tax return and we put $1,200 on there, we hope that's all he owes. And hopefully he will not owe anything on his tax return and maybe get a little back. But the goal is not to owe anything. All right, the next page is just the second page of the 941. And the only reason I'm showing you that is to show you where it says tax liability month 1, 2, and 3. If he had gotten a check every month, the $1,200 is split between those 3 months, so it's $400 a month. So that's the only thing there. All right. Let's talk about other types of ministerial income. That's things that ministers go and do, like weddings and funerals and speaking engagements. Sometimes they go and do revivals. So if they have income from these outside activities, on their tax return, they will report that on a Schedule C, which is a self-employment business. Any expenses he incurs for doing these, the funeral, like he has to travel, keep the mileage logs. Any travel, any other expenses, you have to. Every time my husband does a wedding, he has to go buy a book. I don't know why he needs a book every time he does a wedding. Thankfully, he doesn't do very many of them. But he always has to have a little special book. So he can take that as an expense. So anything that he buys that goes toward what he was doing. I have a retired pastor who does a lot of funerals. He takes the paper so he can read the obituaries. Well, it's a tool because he looks in there to see if he needs to go, speak to one of his church members or former church members. So he gets to take that as a periodical. So those expenses we can take on a Schedule C. Now remember, starting next year, 2026, if it doesn't come up to $2,000, we don't even have to worry about it. But if you make more than $2,000, then we report it and we get to take our expenses. And of course, anything that's on a Schedule C is subject to federal income tax and self-employment tax. So that's why we need to keep it down. All right. Top 5 mistakes that churches make. Number 1, and this is the big one, issuing an incorrect W-2 to a minister. Those of you who were here last year heard me tell you this story, and I'm going to tell it again and give you an amendment to it. And I'm sorry. I have a pastor over in Fort Worth who he retired, and then he decided that he wanted to go back into the ministry. He had a good friend who was pastoring a church, and it's a good-sized church. And he said, well, why don't you come be my senior adult pastor? And he said, okay, I'll come do that. So he went to do it, and he was there for about 8 or 9 months. And he kept trying to get the church financial secretary to set aside, to do the agreement on his housing allowance. And he started from the minute he walked in the door because he knew he needed to do it. She didn't want to talk about it. She didn't understand it. She just said, don't worry about it. I'll have it right, at the end of the year. Well, 9 months in, some things happened, and he decided this just wasn't for him. So he resigned, and at the end of the year, he got his W-2. His W-2 was filled out exactly like a regular employee. It had, I don't remember how much the wages were now, but something like $50,000 in box 1 and 3 and 5. And she put housing allowance on there. So on his tax return, and so I sent him back to her to tell her that's wrong. We got to fix it. Oh no, CPA told me how to do that years ago, and it's right, and I'm not changing it. Because if she changed it, she had to go back and amend all those 941s. So I said, okay. He had to pay self-employment tax on the housing allowance, plus his ministerial allowance, wages up at the top. But that withholding that she took out for FICA and Medicare, where'd it go? It went poof, because he can't claim it, because the IRS doesn't even recognize that. That's Social Security stuff. He ended up with a $9,000 tax bill that he has to pay because that one person refused to listen. She thought she was absolutely right. Now, that was year before last. Last year, he comes back. And I'm wrong. He worked the whole year, and then last year he resigned, like in April. She did it again, and she refuses. So this time, it was $4,000. So he is now paying $13,000 in taxes that he really didn't owe. Now, he owed some of it, but what he paid in for FICA and Medicare should apply to the tax because it's really self-employment tax, but we can't apply it that way because the W-2 doesn't look that way. But here is the one time that I hope the IRS audits me, because I want so badly to tell them that that church has been doing that wrong for all these years. And it's not fair that he has to pay $14,000 of tax that he's now retired and doesn't really have to pay, so he's having to pay it out, which means he's paying interest on it. And I know it makes me mad, okay, for him. But I cannot tell you how many people there are out there that do not know how to prepare these correctly. So it is so important, and why I'm so thankful that Jim lets me get up here and spout this stuff off. because I don't want you doing that to a pastor. I mean, God has put them here for a reason, but it's not to pay extra taxes in. And it's our responsibility to take care of them. They're our shepherds, but we're their sheep, but we got to take care of them. Okay, I'm going to get off that. What else did I do here? All right, the other mistakes they make. Deducting FICA and Medicare like that lady did, and shouldn't have done that. And they don't file their 941s. Sometimes they just forget. And year later, the IRS is sending letters saying, where is it? You've got employees because we know you had W-2s, so where are they? Well, then the IRS sends another letter, and when you get that third letter, we're in trouble. So you've got to send them in a timely fashion. Now, some churches are small enough that you only have to do it once a year, but you still got to send them in, and you got to pay those taxes. And I guess number 4 is including the housing allowance with the salary and not telling your pastor you need to, hey, designate some housing allowance so you don't have to pay so much. And number 5, of course, is not seeking advice of a licensed professional, tax preparer or accountant. So, yes.
Question on this, do most CPAs know how to handle the clergy?
Some do, some don't. I run across more that don't than do. Now, the tax seminar I was at Monday and Tuesday, that particular one, he was right on the money. But you just don't ever know till you sit down with them. That's why it's so important to educate your pastor before he goes and talks to them, so that at least he has an idea of what they should be saying to you. And don't let him say you're wrong, because you're not.
I'm more of the fine print, show me the fine print.
On the, let's see. On the next page over is the tax helps for ministers and churches. If I ever confront that lady at that church, this is my list of all the IRS publications for her to go read to see where she's wrong. And I offered to send it to her, and the pastor said no. He said, let it go. I haven't let it go yet, but it's a great example of what not to do. So on that, yes, all of those publications, they're all about pastors and churches and how to handle your payroll taxes and their wages.
And will these always be the same?
Well, they do change occasionally with the tax laws when they change, but really the tax laws for clergy haven't really changed that much, especially when it comes to W-2s, housing, and what's considered wages.
So how do you know when they change? How do you have
Just,
that information?
you would know by coming to this at the end of the year or by listening to the news, because usually if it's substantial, it's going to make the news. Well, and that brings me to one other thing. This big, beautiful book. This is Church and Law and Tax. They have a website. This is their publication. Everything you need to know about church accounting and taxes is in this book. Anything written by Richard Hammer, which you'll see that in my guide there, he does the law and tax guidelines for new ministers. That man is the Bible about ministers' taxes. So if your church doesn't subscribe to this, they should. Because you'll get newsletters from them that talk about, well, not only, accounting and tax things, but all kinds of church administrative stuff. Like that scam, that's where I read that, was in there. So I cannot recommend this strongly enough. And it's like $180 a year or something for it. They send you the book. Like I said, they email you that stuff. It's worth every penny of it. Now, and there's examples in here. There's all kinds of stuff. What else did I have here? I think we're about done with the pastor's part of that. I think it's time for us just to talk. How much time do I have? I only have 15 minutes. This went really fast this time. Okay. Questions about this, but we also want to talk about church administration. Any questions you have about that? I get a lot of questions about charitable contributions, about what is and what isn't. If they get something in return, like a meal, how do we do that? I know your minds are probably fried from the tax part of this. One more thing about the retirement. I didn't talk about this, and this is another one of my stories that I tell every year. Don't be the church that doesn't take care of your pastor as far as retirement goes, especially the young ones, because they don't know. They don't start thinking about retirement until it's too late. I had a pastor who was in the ministry for 30-something years. And he ministered up in Wyoming, Montana, and Colorado. He went and he took these little bitty 2-3 people churches and grew them. And then they'd get so far, and then he'd move on to the next one. He was married, had 3 kids, and basically lived on whatever they could afford to pay him, and a lot of support from down here in the South, from the different churches. So he had worked some in the early part of his life, first 10 years or so while he was going to seminary and stuff. But he didn't know, or didn't want to know, that he needed to pay in self-employment tax. Now, he didn't opt out of self-employment tax, which that's a whole other subject. But he didn't, so he didn't pay in. And then when he was down, I told him, I said, I don't know what you did that God moved you to Houston from Montana, but something you did was not good. But that church down in Houston, though, ended up being the best church he ever had. It was also the biggest church he ever had. But he got sick. He had leukemia, and he died. So his wife, they didn't own a home. They never could afford that. So she was living in a rental home, and he was 67, so she had never worked. She stayed home and raised kids. And he was drawing about $1,000 a month in Social Security. So when he died, he had no retirement. He didn't have anything. All she had was that $1,000 a month. Actually, I think she ended up with only $700 and something because she had to pay in so that she could get Medicare for herself. He left her in a terrible situation. Now, there is a program that the Southern Baptist Convention has called Mission Dignity, and they have been extremely supportive of her, and they help her every year. But she has to live with her kids because she can't afford it. So now she's 75. She has been working, but she's getting to where she can't. So this is all she has. Don't let your pastor be that guy. Keep him educated. Tell him you have got to provide for the future. You pay into self-employment, to Social Security, and then people say, oh, it's not going to be there, it's not going to be there. Well, it will be there if you die in a car accident and you've got kids. You will get something. Your wife will get something. And then when you're 65, there will be something there, and you will start drawing it. But you've got to have a retirement plan. You've got to start now. So I know I'm preaching probably to the choir here, but when you get these new ministers in, look at what they're doing. Tell them you need to start. It's just something that I feel very strongly about, that we've got to take care of them and try to save them from themselves sometimes. I hear a lot from the young ones that, oh, I can opt out of that and then I'll just pay in and invest it and I'll make more money. You know how many times I've actually seen that happen? One time. That was it. Usually they end up, by the time they're 40, they've done nothing. And so, like I said, y'all take care of your pastors. All right, let's talk about church administration. You got anything? Any questions? I don't think I have any good stories about that this year.
Not a big deal, but just for something. You do an auction, a bake sale auction, to raise money for summer camp. Somebody pays $500 for a plate of cookies, and they want their contribution, their total contribution. How picky do you have to be about only $485 of that is?
Well, I'm not too picky about it because
Haven't been in the past.
no. There are some who are extremely picky. So yes, if cookies are worth $10, they're going to get $490 contribution credit. I don't think the IRS is going to really look at that. Especially they're paying with cash. That's all they care about. Now, if it was a silent auction and they paid $500 for something that was worth $400, then it might be a different story because it's quite a bit more. Now I would only give them $100 for that. If you have a banquet and you charge, $100 a plate, probably only $75 for that because that's a pretty expensive plate dinner. So maybe just $75. But bake sales for youth, no, I'm not picky about that. I don't think they are either. That's a good question, though. Anything else? Yeah, all right. Any kind of questions about taxes, housing? All right, Jim. I thought I was going to run out of time, but now I've only got 10 minutes left. Thank y'all.